Welcome back, guys. In this episode, I'm taking you step by step through the ultimate cryptocurrency breakout trading strategy, which just so happens to be one of my favorite trade setups. So ever since 2013, I've just been absolutely obsessed with trading and investing in cryptocurrencies. And over the past several years, I've found out what works in these markets and, more importantly, what doesn't work. So in this episode, I'm going to walk you step by step through one of my favorite trade setups, which is a breakout trade. Now, before we dive into the charts and the details about the strategy, I just want to tell you what my number one goal in trading cryptocurrencies is, and it might be a smart goal for you too. And that goal is to trade less and profit more. And let me give you a little context about why I say it that way. So I used to be a day trader for a long time. For many, many years, I would sit in front of my computer for 8 to 12 hours a day. I would be actively day trading the stock market, and I would be developing software and everything from automated to semi-automated trading systems. And over the years, as the stock market became more and more competitive and more manipulated, I just felt like I was fighting an elephant for peanuts, right? Like it just wasn't worth the effort. And no matter how many thousands of hours I poured into it, the more I traded, the more difficult it became. And in 2013, when I dove headfirst into crypto, I had my big aha moment, which was actually less is more. Like, I could actually make more money taking just a few trades a month in the crypto market that I could hope to make trying to make dozens and dozens of day trades in a day. And so that became my motto, is to just look for those big home run opportunities and then sit back and enjoy life. And what I found out after helping thousands of other traders was the number one reason that traders actually lose money is due to over trading. And really, the only time that you want to take a trade is when you have a high probability of that trade winning, and you can also formulate the trade where your reward to risk ratios are in your favor as well. And the reality is, guys, is that just those opportunities don't come along every day. And so in this video, the strategy and kind of the approach and methodology that I'm going to teach you has to do with being patient and waiting for those really big home run trades and ignoring everything else. Okay, so if day trading is buying and selling something in the span of one day, and you might make hundreds of day trades in a day or just one, and you might hold it for a few minutes or a few hours, but day trading is essentially getting in and out of a position in one day. Then swing trading is a little bit of a longer time frame. And looking over all of my crypto trades over the past 5 years, my average hold time is about 2 to 3 weeks. Okay, sometimes it's a few days, sometimes it could be as long as 2 or 3 months, but on average, it's about 2 or 3 weeks. And my profit target, what my goal is for every trade, and again, not every trade's a winner, but what my goal is I'm looking for 30% or more moves in the market. And that varies depending on volatility, but the idea is I'm taking fewer trades and looking for bigger moves per trade. Now let's talk about some of the benefits of swing trading. So like I just mentioned, you get to catch bigger price moves, but also you're less likely to get shaken out of a trade. And what I mean by that is, like, if you're day trading, you're going to be looking at maybe a shorter time frame, like a 5-minute chart or a 1-hour chart, or there's different types of charts, but the smaller the time frame is, the more noise there is in the price action. And so the more likely you are to get stopped out or shaken out by random price action, right? And also, by swing trading, you're going to have fewer trades, right? Instead of having maybe 20 or 100 trades in a month, maybe you only have 2 or 3, but fewer trades mean fewer opportunities for mistakes or lower margin for error, right? Where if you're taking a whole bunch of trades and you have more room for error, right? Either technical errors like buying when you mean to sell or selling when you mean to buy, which sounds silly, but I've done it several times. Or mental mistakes, right? Where you let fear or greed or you let your mind play tricks on you and you end up mismanaging a trade. I've noticed that with most traders, that's a very common thing as well. Also, there's less time spent in front of your computer. I mean, I can't tell you how much it sucked when I was day trading to sit in front of a computer for like 8 to 12 hours a day, either actually live trading the markets or developing strategies and running back tests. And it's just a ton of work. And so what that does is it frees up more time to focus on other income or wealth producing activities, right? So again, if you can make more doing less and you have time to go do other stuff too, it's like a win-win. All right, so now that we know that swing trading is just a really good time frame to trade, why breakout trades? What is a breakout trade and why is it just a good strategy? Well, I think for newer and actually experienced traders, but specifically for newer traders, it gives you clear entry areas. So I'll just kind of ask you a hypothetical question. Have you ever been in a scenario where you went to buy something, like you're looking at a cryptocurrency or a stock or any other financial market and you want to buy, but you're not sure about timing? Well, breakout trades are really good at helping you with that timing. It gives you very clear entry areas. And then also it's easier risk management compared to like buying dips or when like the market's panicking and you're looking at this price action and the market keeps falling and you're like, I don't know, do I buy now or do I wait for a bounce, right? Or if you're trying to short a market that's like going straight up, right? It's kind of like trying to put your hand on a rocket. You don't know if it's going to blow through or if you're going to catch the top and see it roll off your hand, right? With breakout trades, you have really, really clear risk management as well, which we'll talk a little bit about. Okay, so what is a breakout trade? And we'll dive into some charts, but I just want to give you like the 30,000 foot overview. So a breakout trade starts with a clear trend. Okay, so there's another big benefit. You're trading with the trend, right? So it starts with clear direction in a market, and that's followed up by a period of consolidation or where the market's like taking a breather and going sideways. Might look a little choppy, probably low trading volume on the chart, and then price breaks through a resistance level, right? You have a price level, say $10,000 in Bitcoin, and you're hitting up against this resistance level. That's clear resistance on the price chart. And then what happens is when you break through that level, it creates a cascade effect of buying activity. It's like buying begets more buying, which encourages more buying. So it's all about timing, and I'll show you how to do that. And I want to talk a little bit about why big breakouts happen, right? Like you can see them on the chart, but I just want to talk about people, right? Because people and computers are what drive price. It's not some magic candlestick on a price chart. It's the actions of all market participants, right? Individual traders and investors like you and me, big hedge funds, computer algorithms, right? The actions that people take are the reason why markets move. So what happens with people during a breakout? Well, when price breaks a resistance level, you have people that see the breakout and they buy the break of resistance. Duh, right? Sounds like pretty obvious, but that's just the start of it. The second is anybody that was short, meaning they were betting on the price going down, they short. What they have to do to get out of a position is they actually have to buy to cover that short position, right? So if shorts see price breaking through a resistance level, they're more likely to go, oh crap, I got to get out of this trade, and they close that, and that is a buy order. So it adds to the buying momentum. And then you have anybody that was thinking about selling, they are way more likely to actually pull their sell limit orders, right? So some of you guys know the difference between like market orders and limit orders. A market order is just buy or sell right now, whatever the market price is. A limit order is let me put a sell order at X price and wait for the market to come hit it and fill it. But if you're a seller and you see price going up, you obviously want to sell higher, right? So if price has momentum, you're more likely to pull those sell orders and wait for it to slow down. And then you have what I call like mom and pop late investors, people that watch CNBC, which we're going to talk about here in a second when we dive into some of these case studies. You have people that see the breakout and they're maybe a day or two or three late, and they see on the news, oh, Ripple or Ethereum or Bitcoin is up huge. Well, honey, let's go ahead and buy. And a lot of times they're kind of the final ones that are buying close to our profit targets. Now, there is a big key with breakouts. Not every breakout works, right? Sometimes you get what we call fake out breakouts, where you'll have price that actually breaks the resistance, and then for whatever reason, it just reverses and slams against you. And so the key here is you want to spot breakouts and really only participate in breakouts that you believe have a higher probability of leading to a big move in price. Like, you can find breakouts all over the place, but you really only want to trade the ones that you think have a high probability of giving you one of those big multi-week breakouts that you can actually swing trade. Now, let's get to the really fun part, which is the technical analysis, right? And this is the pattern that I use and that I want to take you step by step through. And this is called the 1, 2, 3, 4 breakout pattern. And the reason why I call it 1, 2, 3, 4 is because there's just 4 steps. And the first step is you start with a run in price. If you're looking for a long, obviously you want to see price trending up, that sets the trend direction. And because prices don't just go in a straight line forever, step number 2 is you want to look for a pullback in price. So you want to see price come down slowly, typically on lower trading volume. And then number 3 is you look for price to consolidate, and it eventually retests the resistance level. Now, just kind of a side note, and I have the guide linked up in the description below where you can read more detail about this, but in this video, I'm just going to give you kind of the 30,000 foot overview and give you some case studies. But sometimes you'll have a pattern like this that consolidates for 5 days. Sometimes it'll be, we've taken breakout trades where we've had more than 6 months of consolidation. And typically the longer the consolidation period, the bigger the breakout. So that's kind of a key note for you. Number 4, this is where you actually enter the trade, is where you break the resistance area on high trading volume. So let's take a look at this chart and I'll show you what I mean. So step number 1, you get a run to the upside. And then step number 2 is you get a pullback, right? Step number 3, you get a retest of that resistance level. And then step 4, you get the breakout, okay? And you'll notice that this is actually the beginning part of 2016, and it was about a 6-month consolidation period here on Bitcoin, and then it gave a 65% breakout. And then you'll notice that actually this breakout became the next 4-step pattern, where the breakout was step number 1, then you got the pullback, then you got the retest, and then you got the breakout. So step 4 here from this first pattern turned into be the run of another breakout. So you can have these consecutively sometimes. Now, there are several other factors that can increase the probability of a breakout working. And one of those factors is a news catalyst. Now, what a news catalyst is any kind of news event that comes out either right during the breakout, can actually cause the breakout to happen, or a little bit after the breakout. And what a news catalyst would do is either increase the probability of it working, or making the breakout go much further than it would have without that news event. And some examples of these news events would be like, say, a blockchain came out with a development announcement that they released something new or some positive news related to the cryptocurrency. Another would be, say you had a big prominent investor or entrepreneur that backed that crypto asset or whatever it was, or maybe there was some positive government relations, maybe a government approved the coin for some kind of project, or they accepted it as legal tender or something like that. Or there was some information that came out about like adoption rates rising, or the community behind that crypto asset growing, right? So one thing I'll say about news though is there's a lot of noise in the news, and most of the news that you see is either regurgitated or rehashed opinions that really don't matter, or it's like biased information with an ulterior motive. So whenever I look at a news piece, and in the crypto space, I mean, there's dozens and dozens of like news pieces that come out every day, and you really have to learn how to like see the signal through the noise, right? And how to understand what could potentially move a market and what is just unimportant information. And here's what I'll say about breakouts, and really any trade in particular, but specifically for breakouts, risk management is everything. This isn't something where you just say, hey, I see a breakout and I'm going to buy and hope that it goes up, right? You might get lucky every now and then, but risk management is everything in trading, guys. So what do I mean by that? Well, there's really three things to look at when you're structuring your trading plan. The first thing is stops, right? Like if you get in a trade and it goes against you, where do you take a stop loss? Where do you cut the loss off? And your goal as a trader should not be to win every trade or to make every trade a huge winner. It should be to never take a massive loss, right? You're going to have small losses and small wins, which over time should hopefully cancel each other out. And then you're going to have big wins. But what you should never do is put yourself in a position where you take massive losses, right? If you're managing risk properly, there's really no need to do that. And so a stop is where will you close your trade if it doesn't do what you expect, right? And if you get into a trade without asking that question first, you're going to mismanage your trade and lose more money than is necessary. Step number two is your position size, right? How much capital are you putting into a trade, right? What's the dollar amount or whatever your currency is that you want to use as a unit of account? How much capital are you willing to risk and potentially lose on this trade? And then the third is your profit targets, right? Where will you close either part of your position or the entire trade if it does work? You basically want to map these out like a chess player or a poker player would, right? If you're playing chess and you say, well, my opponent could do X, Y, and Z, how would I respond to those scenarios? That's what risk management is at its most fundamental core, is like saying, what would I do if the market A did what I expect or B did what I didn't want it to, right? And plan for all of those scenarios. So now that we've kind of talked about what the breakout pattern looks like and a little bit about risk management, I want to show you some case studies and show you kind of how I think through these trades, because charting is really only one of three types of analysis that I use. You have technical analysis, but you also have fundamental analysis, which is like the economics behind a cryptocurrency. And you also have market sentiment, right? Or market conditions. Basically, like, is there euphoria in the market? Is there panic? Is there uncertainty? Is there a lot of media attention? Is it hype-based or fear-based? All of these things, when you put them together, create the complete trade package, right? And so we actually do a lot of trade alerts in our trading community at the Skill Incubator. So I'll show you how we kind of write those alerts out and why we talk through our thought process a lot of the times. And so this is a great breakout that we had on Ethereum at the later part of 2017. And it's crazy to think, you know, Ethereum made it over $1,000 and we've been trading Ethereum since it was $1.50. But on this chart in particular, this pattern is where we basically start out at about $100, and you can see over the course of about 6 weeks, it runs up to 400. So pretty decent run. And then it pulls back. So there's step number two, right? So step one is your initial run. Step two is your pullback. Step three is consolidation. And it was about just under 6 months of consolidation here, right? And there was a pretty big range. It was like $200 to $400. But then what happened on step four is when we broke above 400, we had been hunting this breakout for several months, okay? And we predefined the risk to reward. We were looking for risking about, I don't know if you can see these numbers, they're pretty small, but risking about 30 or 35%. And our first profit target was around $800, which was about a gain. So that means it was about a 3-to-1 reward to risk ratio. And then it actually went much higher to give about a 6-to-1 reward to risk ratio. So really, really nice. From a technical kind of breakout and a risk to reward standpoint. Now, I'll show you some of the trade alerts that we put out. So Rocky, aka Crypto Hustle, right here on the breakout, you can see just on this day as we're starting to break 400, he sent an alert saying, you know, scaling into Ethereum on this breakout, our targets right below 800. So as I mentioned in the beginning of the video today, my goal is not to trade every day. It's just to wait for those big, blatantly obvious patterns and trade those, right? Trade less, look for the bigger moves, have more time to do other things. Now, in our next case study example, we're going to take a look at Ripple. And Ripple's one that has had tremendous gains over the past few years, and it's also been one of the most volatile cryptocurrencies for several reasons, but let's jump into the chart. So Ripple had, just kind of like Ethereum, several months of resistance around 30 cents, and then when we broke 30 cents, it went up to about $3 within just a few weeks. And what happened, this was actually helped and partially caused by CNBC and the mainstream media causing a buying frenzy to where Ripple gained about 1,000% in 3 weeks. So as Ripple started to break through 30 cents here and our breakout trade triggered, I sent a trade alert and basically explained my thought process and what I was looking for and how I was getting into this trade. But I said, you know, Ripple's one of the low priced, high hype coins. So if 30 cents can hold as support, I think we could see at least an extension to 60 cents. That was my first profit target. And actually what happened, so this was 2 days later, Ripple started to get mentioned in the mainstream media. And I said, you know, absolutely beautiful follow through on this trade. So because of those other fundamental events that helped this trade go further, I said, I'm going to be patient with at least half of my position, maybe looking for a $1 to $2 price target. I have no clue how far this could go, but check this out. But if CNBC and other news outlets start pumping it, basically like talking about how great Ripple is and, you know, start talking about how to buy it, then we could see a rush from emotional investors, especially since it's the cheapest coin on the top 10 market cap coins. I said, you know, most people don't pay attention to supply or market cap. You know, so think about it. If you're at the water cooler at work and, you know, you're telling your coworker that you're in cryptocurrency, what sounds more impressive? I own one Bitcoin that cost me $10,000, or I own tens of thousands of these Ripple coins, right? Like that's kind of the mentality of some of these mom and pop investors that just see this stuff on the news and they don't pay attention to the supply of the coin or the market capitalization of the coin. So we thought at the time of the entry at 30 cents, we thought that Ripple, you know, had room for the market cap to grow to maybe $1 to $2, but at $3 to $5, the market cap would have been close to Bitcoin's value, and we thought that was just overvalued. Now, this is where things started to get really fun for Ripple. CNBC started to get involved, and in our trading community, we kind of use CNBC as a counter indicator, meaning we want CNBC, whatever they're saying and doing, to be on the other side of our trade because they are historically notorious for encouraging people to buy high and sell low. And what actually happened, you can see here on CNBC's Fast Money, this is a recording of what they aired live, where they were essentially showing people how to buy Ripple at $2.57. This was way after our entry, after the price had gone up about 800% in just a few days. And so what's really interesting is after they were showing people how to buy Ripple up here at the top, after again it had gone up 800 to 900%, they did another crypto class on how to sell Ripple down here. Notice how the market basically pivoted right around their quote-unquote crypto classes, right? Again, CNBC notoriously teaching people how to buy high and sell low since 1989. Like, this is the reason why we love using them as a counter indicator. So when you combine the 1, 2, 3, 4 setup and you understand how fundamental and market sentiment factors play into market action, and you combine those and use them to create kind of a cohesive story behind a trade, that's when you begin to A, trade with confidence, B, trade with clarity, know what you're doing, where you're getting in and out, and why. And things just start to make a lot more sense. So I hope this video was helpful. And so if you want to learn more about the breakout strategy and just see some more detail, I created a pretty long guide for you, and you can just click right over here or down in the description and you can see that. But again, my goal for this is just to help you find more clarity and consistency in your trades and your investments. and just gain confidence, right? And know kind of the better times when to buy and sell. And so again, go ahead and check that out. If you got value out of this, give us a thumbs up. If you have a question, leave a comment and maybe share this with anybody that you think would get value from it. And thanks a lot. I will see you in the next episode. Take care, guys.